Hey, hello everyone, and welcome to the Daily Drip. Welcome to today's video. It is Monday, the 24th of February. I was gone for, pretty much the whole week last week. I was able to throw in a few updates as I was out in Ohio. Um, Not a whole lot has happened until actual Friday when we started to do, quite a bit of a heavy sell-off under a pretty decent volume, and that had a little bit of a follow through today, Monday. Now, on Friday, you could say that maybe a lot of the moves were kind of had something to do with the fact there was a large option expiration, the monthly expirations, which happen every month on the third Friday of the month. But the fact that we followed through today, that's a bit concerning. Although you'll see in a second here that maybe a little bit less stocks has sold today. So we have a little bit of a divergence. Now it's very early. We'll also take a look today at the wave counts. We'll update those, and first of all, I want to go through this price section, see where we are in regards with the moving averages, and kind of what are the levels, what some of the breadth indicator telling us. But basically, it's clear that the market it's kind of whispering to us to get defensive. It did so with the heavy break on Friday of that previous candle that kind of told us, hey, it's time to get a bit more bullish because the market it's starting to push to the upside, and it had good volume and everything. So the moment we undercut the low of that candle from February 13, that was a sign that the market has other ideas here and it's time to play defense. So this is just a quick look, obviously, at the four major markets here, and that's the composite, S&P, Dow Jones, and NYSE, just on the kind of a one-page look where we're seeing how we're breaking below the 50-day moving averages, with the exception of NYSE just yet. So taking a look at the levels against the 200-day, this is still looking like a pretty healthy uptrend, nothing more than somewhat of a correction that's still ongoing. IWM, it is the one that's getting hit the worst here, that it's starting to actually attack and undercut its 200-day moving average here. Okay, in terms of events, I don't think we could say much. I mean, I'm not going to put that option expiration there, but you can see the just a tiny little brand new all-time high that the market created before it started to flush to the downside. That was a very perfect trap that it set, and it basically turned around. Now we'll see if it's going to have a lot of traction here. We'll take a look at the wave count. It could be just still part of some kind of a larger wave for correction, but let's see what the market is telling us. Bottom line is it's hard to press the pedal or to do anything silly here from the long side until the market it's stabilizing and it's turning and it's starting to kind of again exhibit some kind of a bullish bias, of some kind of a tendency to try to reverse. Not much on the advanced decline line. Again, I'm quite surprised with the fact that we're seeing a couple of days of pretty heavy sell-off. That the advanced decline line is still kind of going sideways, which means this is maybe a bit more localized to maybe some of the larger names, but it's I would have thought that this would break again below that 50-day moving average. Now it might do so. We'll see. But for right now, it's holding pretty strong here. In terms of the breadth above the moving averages, yeah, I mean, it's been declining in terms of stocks below the 20-day moving averages. Let's say, I don't know, ever since the end of the January. So most of the February, as the market was kind of going sideways, a bunch of stocks were starting to lose their 20-day moving average. Not as many losing their 50. So that's very interesting. And then, not even their 150 or their 200 day. So it doesn't mean that this cannot accelerate, but that's somewhat of of an interesting sign here in terms of just being doom and gloom all of a sudden, because it doesn't really show us that way from kind of what we're seeing. And then yeah, we did get some new lows in here, especially in the Nasdaq, which seems to be the market that's kind of hit the hardest. Minus 256 today versus 61 S&P very small, and NYSE also quite small. So we're not at the point yet of kind of massive capitulations. In terms of the declines, you can see like on Friday, you kind of had the worst day. It was like almost 3 to 1 declines versus advances, and today you only lost about. I mean, you can see the divergence here, kind of tiny, right? From February 21st to the 24th, right? It's actually higher because you have 287 stocks. That's the difference, the spread between the declines and the advances. And at some point on Friday, it was like at 1230 or 1250, whatever that was. So you made a new low, but the stocks, just kind of stopped going down for what it's worth. So I don't know what to make of it really. I just want to kind of point that out. That maybe it's not really the time to get super aggressive to the downside. If anyone was quick enough to kind of fade that rally in any way, I mean, it's hard to do that. I mean, you would have to be on a lower time frames and see that there was a kind of a failed move, recognize it pretty quickly, and start to move on the short side. But those are very nuanced type of trades. And if you're experienced enough or seen this plenty of times, you can probably take advantage of some of that stuff. Otherwise, it's hard to say that you're quickly gonna go. XLY was XLP was the other one that was hinting. I mean, I know in hindsight it's easier, but it was hinting a little bit of an issue. As the S&P was going higher, we looked at this, I think, and we noticed that the XLY versus XSP was turning. We thought it was mostly kind of due to Tesla and maybe Amazon, having a heavy weighting in the XLY, turning, diverging from the market. But it started to happen, especially on the last couple of days, also in the equal weighted index. So you can see now you have a bit of a flight towards safety, which is staples, right? Which is your toothpaste and toilet paper and I don't know, laundry detergent, all of that stuff. Kind of the market, or the participants are kind of running towards and kind of throwing away their discretionary items. And to tell you the truth, I don't know if it's the economic data, if it's because there wasn't really any news from the Fed or anything that could spark, and it doesn't have to, right? The market just it's tired of going up, or as a collective mind, maybe wants to play a bit more defense. What's also interesting is the fact that those, that bull bear indicator, it's still it still shows pretty heavy bearishness, when you're at the top, and that's a bit of a very interesting development because usually, when you create a top, people are a lot more bullish than kind of being scared of anything else. So I don't know. Again, it could be just a very simple correction. I don't know if it's the start of a much larger, I don't know, let's say 15 or even 20% correction in the markets. I don't think that's the case, but we'll watch it here day by day. And then you go over SPHB versus SPHQ. That's really nothing here. Not a lot of excitement into, this market has just kind of been dead. That spread between high beta, low beta. S&P, clearly a lot more distribution. That's kind of started on Friday, and this is the candle that we watched, right? This was, one of the pretty decent signals that the market gave, and it continued to push higher for several days, and then it quickly gapped lower and it stopped. So now you undercut the low of the signal, which was right there, right? And the market did that forcefully right into the 50-day, held for a day, and now we kind of broke below it. So until we see some of the signals coming back up in terms of white candles, good volume, it's hard to be, maybe getting above this moving averages, right? It's hard to be aggressive. So if anything, watch your stocks and just cut what's weak and what's obviously where there's losses and things that break your levels, even if you don't sell all at once. But under this type of a scenario here, it's hard at least not to cut some of it. Let's say if you, I don't know, if you own 1,000 shares, just saying you could get rid of 200, 400, maybe even half of those, and then just wait a little bit and see how the market keeps going. Put more stop losses below, and let yourself get out, before this turns into, some kind of a topping event. And maybe tomorrow we'll take a look at. I know we've had some charts from previous tops where the markets just kind of break their 50, then go back up, and then go sideways for a little bit, and then they touch their 200 day, and then so it's type of a process, right? It doesn't crash all at once, but it just moves slowly, and it turns, and the moving averages turn, and then that the market is about to kind of hit some trouble. So anyhow, that's the S&P here with those undercuts. Even heavier, obviously, moves in the Nasdaq Composite here. This one didn't even make a new high, right? So it was a divergence to begin with between the S&P and the Nasdaq Composite. Let me just get a sip of coffee. But a couple of pretty heavy black candles. I mean, we've got them before. We've gotten this heavy one, and then you went lower, but this was on a rising 50-day moving average. Now, the moving average is flat. You're now below it, so that's a bit of an issue. It could continue to kind of have several days of, even if it pulls back a little bit, but up until you're getting back above 19,700. I'm sorry, yeah, 19,700. It's hard to be offensive. So these damage will take a little bit of a recovery. I really don't like very very sharp rallies all of a sudden, but remains to be seen. Nice C in here. It's held up fairly good. It still looks like a small cup and handle here. With the head, couple of shoulders. Double test of these highs. I mean, the RSI is still, briefly, I mean, barely, I'm sorry, barely holding 50. And this is more of the general market, right? When you look at the NYSE, you look at the average stock kind of a thing. You could put the RSP in here. You could put, QQ, EW, so the equal weight of the Qs, and a lot of these charts will look similar. So again, S&P losing this, losing the 50 RSI. PPO is not below zero yet. But it's been a difficult market, very difficult market. Very hard to kind of make any serious gains unless you are in a very specific stocks, particular few ones that were able to kind of be very strong. Otherwise, it's been a chop fast since December. Looking in the hindsight here, NDX, clearly we already kind of touched on it, but I just want to have the view of the PPO and the RSI in here. I mean, look at this thing. It's still a pretty decent uptrend, until it isn't. But for right now, we haven't undercut any major swing lows. Mags, yeah, they've taken a break. It looked a long time that this could be some kind of a triangle, and it and if it was something else, like maybe it was a triangle with the failed fifth wave in here, and now we're building some kind of a leading diagonal with the wave two. And if that's the case, we're just starting to sell. So very curious to see what happens here, but I would not touch this index yet. That ETF. Dow Jones has been strong today. That's actually been positive on the day, about 8 basis points. And I don't know if it was just Nike, but there were a few others. I mean, especially, so every time you got kind of a market sell-off, especially in the Nasdaq, right, the Dow will usually offer some kind of a safety play, because there's a lot more value. There's healthcare. There's a bit of a finance, right? You got some whatever materials, and maybe insurance companies. Those type of plays usually provide a little bit of a safety. And Dow Jones just kind of said, hold on a second, let's not rush with the selling in here. And it created a little bit of an inside bar. Curious what we see tomorrow. But again, until you actually get back above 44,500, it's a bit of a tough play here as well. IWM, yeah, this one got hit, and now it's pretty heavy below its 150-day moving average. I think we just cracked the 200 as well. So, for what it's worth, there's nothing here, and this smells, more and more like this was some kind of a flat in here, in maybe some kind of a second wave or a B wave, one of the two. And you're getting now the moves to the downside. So we'll see how much more it's got in the tank. But until you get back above these levels, once again, this is a no-go. Bitcoin, Bitcoin is very pretty in terms of its reaction. So it's building these very kind of interesting kind of bullish engulfings and then bearish engulfings, these kind of failures, but they do happen kind of a critical level. So this one back here in around 12, 13 February, right, happened at this kind of 94K. This one happened right at the previous highs of about 99, and it at some point it tried to, then it failed right at a 50-day moving average, and the moment it undercut this level of 95, like there's no business being long Bitcoin, right? Because yes, it could be another failed move and you could get a bullish engulfing, but what if you don't? What if this thing, what if somebody just kind of opens the door, the floodgates open, and all of a sudden you're at 85, overnight or something? I mean, we've seen Bitcoin do that. So that's why it's a dangerous place, especially with leverage. Yes, you are coming into some kind of a support that's been holding on here in I don't know, December 2024 here to about January. So for about a month, we've had this kind of level at about 91, 92, which seems to kind of get attacked again. So we'll use that for now as a base, but the fact that you've broken this long consolidation, we talked about it, that, every once in, I mean, not every once in a while, but once this happens, it could lead to a major move. And usually what happens is you get a fake move in the opposite direction, which I'm thinking was this one back here, which it tried to move, but then it trapped whoever wanted to go long here, and now it's reversing. So, can you quickly stop right now, or do you have a lot more to go? Based on so many days of consolidation, I would think that that this can come all the way towards 80,000, but I'm not going to make that prediction. I'm just saying that it's been a long consolidation. It shouldn't stop right now, based on that. Now, what I would love to see, because obviously I have long Bitcoin into my other holdings and all, from back then, you could you could I would love to see like a bullish engulfing, this being the larger failed move, this drop down, see a nice, white candle that takes us all the way above 100, and that would be the signal go, right? And then now we're going towards 1K and above, 110 and above. But, so far that's just kind of a, just kind of a, imaginative, I would say, roadmap, for a lack of a better word. We'll see. TNX, losing in here, so it's, you can't really blame the yields because they're coming down and they're helping. The dollar index, it's nowhere near where it was, right? So it's from 110, it's 106. So there's nothing here in terms of dollar strength. So something else is going on. Gold is still fairly steady. Silver, it's doing its thing, a little bit on an uptrend here, above the moving averages. So it's got all reasons to be kind of traded from the long side, but it's been very choppy market. WTIC, down at 70, and then VIX here reached 20. Yeah, again, bull bear sentiment. We'll get an update on Thursday, and I'm curious how it's going to be, but it's still fairly heavy on the short side here, which is not typical. All right, so quickly let's take a look at the wave counts. I know this is turning into a bit of a longer video because I haven't done updates, but hopefully you can get through this, or speed it up, I guess, on a video. Nasdaq Composite looks a bit different than the S&P, just slightly, but my projection of a triangle, obviously it failed here because we didn't break to the upside, so I have to delete this, and I gotta think that this was probably, short of this being some kind of a flat like that, right? Because you can get like let's say a three-wave move here, like an ABC or a WXY, let's say, for a wave B. So you get an A, B, and then down in C, into a fourth wave, and then you go up in this larger wave. If this was a wave 4 up in there, we go in an A, B, C, D, small e, and the market faked us with a short fifth wave. Now you got to take all of this, put it up there, and say, well, that was it. So now if that was it, that means that you're going to be working a fourth wave, right? Which, you kind of compare with something that happened back in October 2022, January back there, and you say, well, this might have some while to go. Now it doesn't have to, it doesn't have to crash. Um, the only way this market is kind of moving into some kind of a heavier sell-off is if this was some kind of you know let's say fifth wave in here at the higher degree, and I don't have that or some kind of a wave one, so from here to be like another wave one, which would be like this wave, right? This wave one that we're waiting for it to get formed right there, right? I guess you might see it better on the weeklies, right? Because you would take this wave one from there and you would say, okay, fine, it's going here, and now you're doing a deep wave pullback, a wave two pullback. That would be kind of one way. Maybe there's a couple of other ways that I'm not aware about, but that would be one way to say, well, that's a deeper correction. Otherwise, you'd probably be in some kind of a more, choppy, some kind of a fourth wave move. So bullish scenario would be this being some kind of a flat, and you still go higher for a while, right? And then bearish scenario, and then kind of sideways scenario would be this fourth wave, pink, right? That you would go sideways for a bit more, and then the other bearish scenario would be that you're actually beginning a wave two, which means if this wave moves here, right, that you would have now at a minimum, or at the most its basic correction form, you would have an A, you would have a B, and then you would have a C wave, right? So this whole thing will take until this fall, and it would be choppy and a bunch of sell-offs, rallies. It would be almost like a mini bear market happening, and then you start to kind of go back. So we'll keep an eye on it. We don't know which one it's going to be, but at least we have some kind of a mental preparation in kind of what can happen here, and what to look for. If that helps in any way. That's the Nasdaq Composite. Now I'm going to save this up, and then we go into the S&P, and you can see this one, this pattern here. If you look at the weekly, there's really not a lot of things wrong, right? You just got a nice little pop in here, and still looks fairly decent. Can you actually put a wave 5 just like we did over in in the Nasdaq up there? I don't know. I think it will look very odd, if you ask me. So I'm not going to do it just yet. I'm gonna stick with this. And the two markets, can have a little bit of a different wave count. I don't have a problem with it. This could be again either. See, I don't think this could be a wave 4 flat in orange, because well, maybe it could. Let me just take this out of here and just push it over. Because you could do like an A, B, C, or a WXY for a B, and then you do a wave 4 C wave like that, and you come down maybe near this levels, and then you go up again. So I guess you could, and then under this circumstance, you would maybe, I guess you'd maybe match the S&P, where the Nasdaq Composite, where where we're looking. Well, I guess the subdivision here is a little bit different, but that's okay. So anyhow, that would be one way to kind of keep this wave for orange still in progress, right? So now let me revert back. Did I save this? I did, didn't I? That's okay. So what I thought it was going to happen, or what can still happen, it's going with this, up there, and use this as a flat, right? So if I go a bit, let me just kind of connect this wave so they're clean. This could be a wave 2 as a flat, right? Because you go 3 down in 5 and you're done, and then you begin a sharp wave 3. So my question is, what if the market is just kind of putting a lot of people on the wrong footing, creating this kind of bearish expectation just before it actually starts to rally very strongly into 6,500? I don't know. Obviously there is A lot of negotiation happening politically and from a geopolitical side with Ukraine, France, U.S. in terms of trying to kind of put an end to the war there. That could be a very bullish catalyst if we eliminate, let's say, this risk. Maybe this whole thing has already been priced in by the market. We don't know, but maybe that could be some kind of catalyst. I don't know what else. I know Apple got a kind of a big. I don't think it was a contract, but just more of a commitment to invest a bunch of money here in the U.S. to open up factories, things of that nature. So I don't know. I think that there is some kind of kind of underlying motive for this market to really rip to the upside, but it doesn't feel like that at the moment, right? Because we're just living here day by day on the thing. But you just kind of step back a little bit. The rates are somewhat fine, so I guess we'll wait for PCE, we'll wait for the Fed, but in the meantime, you got to play defense and just make sure you're here for the bigger moves and don't get washed or killed into some of this chop unnecessarily. So that's kind of what I'm trying to do. And I did have to kind of cut down and reduce and just kind of watch a little bit carefully. Now that I'm back, I'll spend a bit more time analyzing kind of where my personal stocks are and what they're doing. But it's definitely a couple of challenges in here. So we'll see. I'm giving you this couple of scenarios. I'm going to keep an eye on this. For me, the primary kind of method, it's reading the price action. Elliott wave comes a little bit second by looking at the structures, adjusting them, but uh, you know, but the trends, the moving averages, those kind of accumulation distributions days are the ones that are telling you kind of more closely what's going on. The wave counts sometimes, especially when you're not in a third wave, because that's easy, right? When you are into the fourth or some kind of an ending moves, that's when it becomes complicated and it can really throw all kind of scenarios, and it becomes very confusing at those times. So you got to revert to the more simpler analysis, and which is, hey, did it break that level? Well, that's a problem, right? Now we got to be defensive. You can't just assume that necessarily it's either a flat or I don't know, some kind of a quick second wave, because you don't get a lot of second waves, let's say, deeply below moving averages, right? That's a problem. That's almost like, especially if they start to turn, that could mean that maybe it's a third wave to the downside starting. If I made myself understood, in kind of this explanation here. So anyway, um, again, thanks for watching. I think that's it. I don't have. Maybe we'll talk tomorrow about the wave count in Bitcoin. If you look at IBIT, right? So you could still be in this fourth wave, but I'll try to spend some more time tomorrow looking at it and just pulling the other account with Bitcoin, not the IBIT one. But so far, I don't see any need of modifying this in any major way. So I'll leave it at that, guys. Thanks for watching as always. I appreciate you. Welcome to the new members, and thanks for being patient last week. But we'll pick it back up. The next time I do have trips, it's gonna be in March. So it's going to be like middle of March. I'm going to go to Romania for a couple of weeks. So that's going to be interesting. We'll see. Maybe I'll put a letter on a pause, or I'll try to provide updates. And then I know I have a trip to London, but that's in April. And then we'll go from there. All right. Thanks for watching. Bye bye.